Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 20th of February, 2020. Thanks for joining me for episode number 1696 this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the allocation is slightly to safety. The Dow's down 67 points. The S&P's down about 8 points. The Nasdaq's down about 27 and a half points, and the Russell's down 6.4 points from settlement. The cable is off. There's commentary from the European Union regarding Brexit that there will be hard negotiations ahead. And crude oil is popping higher. Crude oil is resuming its uptrend, in my opinion, up 68 cents or 1.27%. Gold, wow, it's at 1618.30, up another $6.50, up 0.4%. Again, allocation is to safety this morning. So that's where we stand. Looking at what was released overnight, GfK consumer confidence out of Germany came in slightly stronger at 9.8 versus 9.7. Many different numbers have come out. I'm not going to go through all of them. U.S. initial claims came in better at 210,000 versus 215. Philly Fed just blew up. Came in at 36.7 versus 12 expected. We still have consumer confidence out of the EU at 10 o'clock. That's a half hour after the open, expecting -8. We do have crude oil stocks today. The EIA crude oil stocks today because of the holiday on Monday at 11 Eastern, and then the distillates and gasoline with it. Interesting. And then we should have gas after that, natural gas after that, probably at 12 or so, but it's not listed on this calendar. Fed's barking at 120, and then the inflation rate out of Japan at 6:30 p.m. expecting 0.7. So that's what's on deck schedule-wise. China continues to report deaths and more infections out of from the coronavirus, novel coronavirus, and what. But the trend is lower supposedly. Again, I don't really trust numbers coming out of China, as history has shown that there's a little bit of kind of embellishment there. But it shows a declining trend of new cases, which is great news. China is expected to take a big hit in its Q1 2020 GDP because of this, shutting down entire cities, entire economies within its economy. So it'll be interesting to see. Let's switch gears towards what was expected yesterday. Yesterday, we were in a gap up. Remember, we had 5 days of balance before this. You could see I put a composite profile right here. This red thing here is a composite, which outlines that the market is in balance. Generally, we put up a composite to see what's happening across multiple days, where the volume is going. In case you don't know what this means, this graph here in red, the shaded red, is simply the number of contracts traded at each price to the tick. This is using very accurate tick data, and it's showing the distribution of volume per price across the range shown. The range is this entire thing, and the market's been in balance for 5 days. Yesterday it gapped up, and the expectation is, because it's been balancing for 5 days, the expectation is we're likely to break out, and that's where scenario 1 and scenario 3 come into play. So that was what was expected yesterday. We were looking for the market to open up, dip down into about 79, 78, 79 is the expected area to drop to, turn around, go to 90, pull back, into the all-time high, which was 84.75, and then continue higher just above the 90. Okay, so that's what you see here in green. Again, a pullback to 79.78, a push into 90, pullback into 85, and then continuation above 90. That's what you see in green there. Here's what actually happened. Market has a very clean, very orderly opening swing. Look at that opening swing, just beautiful. We can easily see where buyers stepped in, where sellers stepped in. We can see where buyers stepped in some more. And so we have an opening swing here of 84 and a quarter and 77.75. We stopped 2 ticks short of the high. We push into the 90, which is this stock zone right here. Push into the 90, consolidate, and we ended up paying up to 93.75 before pulling back. The expectation was push to 90, pull back deeper, and then continue through the 90 into 93.94. But it basically hit the key areas expected. Remember, at the low 78.79, it went to 77.75. Pretty much hit it right on the spot. I found the long into new highs relatively easy to trade, relatively easy setup. And then we have this push into 87 and a quarter as part of this kind of swing up. Once it crossed above the open, above the mid, it looked like it was primed to take out the high. And what does it do? So this is a bona fide or bona fide impulse up at 87 and a quarter, pull back right to the mid. Again, the blue line is the mid. This is a setup I talked about on Crudelli's show, Trading Futures with Crudelli. And then we get the continuation. The first target for the mid long, first target for mid long is the IB high. Second target is 90, which was right here. And then there, sit tight unless it falls below the mid, and it didn't, so sat tight. You had to sit tight through the whole session. You could see that the rotations collapsed quite quickly when it went to new highs, and it showed in the order flow. It showed that this squeeze higher, actually this squeeze higher right here was very poorly taken. It was really embattled. The buyers did not have all that much strength, especially for new highs. You would expect it to kind of flash through with stops near highs. And it just did not squeeze very well. So if you paid attention to order flow on this move up, you knew that this was a troublesome new high the way it was being put in by the market. It was the lifting was quite poor, and there was a lot of activity at each price as the market went up. Anyway, it's probably more detail than you're interested in, but I really get into this stuff. Here's what we did since then. We open, we push the high. Yesterday was a normal variation day with a point of control outside of the IB, which gives us an upward skew. Follows through, goes to 97.50, and then rolls right back over. Rolls right back over during the Asian session. Hang on one second. Yeah. Rolls over as part of the Asian session, and then we start to tiptoe up right against yesterday's IB, go to the middle, and what we end up with today is somewhat of a B-shaped profile with a nub in it, and maybe even a smaller nub up here. But overall, the action this morning coming in is relatively bearish. The line in the sand is 88, 87, 88 this morning for me early on based on the overnight action. 87, 88 is the area I'm going to watch initially. If it does push higher, I'm looking for that area to resist. If it does, it sets us up for a short in that region, aiming for the overnight low as the overnight stat is in play. And I'm looking for it to puke on over, but not too much. We did put in all-time highs yesterday, and the market has been uh, putting in all-time highs and then rolling over and selling down. And I don't know if that's what we'll get today, but the overnight session is surely set up that way. The volume overnight is relatively high, 369,000. So there's been a pretty active overnight session. So I would look for areas to get short today. I know we're near highs. The time frame I'm speaking about is just longer than a scalp, a structured short that's slightly longer than a scalp, looking for probably somewhere between 4 and 6 points. This is not to say that you should be selling all-time highs, and of course, if you're listening to someone talking about trading or speaking technicals, the first question you should ask is what? I'm not going to wait for your answer because you're delayed by about 15 seconds. Um, the question you should always ask when you're looking at technicals or trade setups is what is your time frame? Because we can be in a short and a long in different time frames, and we could both win. We could both make money or lose money in the same trade. The time frame dictates where we stand, right? So this is a short-term short. And of course, as the market drops, we'll probably find the dip buyers again. They've been making a lot of money and they'll continue to do that throughout. Okay, so again, most important thing you could ask when you're talking technicals is talking about a trade is what is your time frame, sir? So here's the overnight session. You could see there's a lot of just noise throughout the session. Not seeing a strong buildup liquidity. I do see some below at 33.71. I expect us to actually check that out. The low is 75. The key target this morning, the first target this morning is likely to be that 71 area. Not seeing heavy liquidity above. Those of you who have been watching for some time and looking at my CT Bookmap chart. By the way, you can get this at ctbookmap.pro. I think they do a 14-day trial. I would recommend you do this with a rhythmic feed. If you need help, you can always go into the description of this YouTube video, and there's a link there for brokerage help. But yesterday, if you've been listening, you probably noticed that, I talk about liquidity above and it's likely to attract price, and you've probably seen it. Now, there may be some confirmation bias here, but if you roll back to the last few videos, market does tend to move towards those prices. Yesterday, I colored in the prices above, and we could see the market was well offered above, and it started to roll higher. That's not always the case, but we still have to take into account the context, the trend, and so on. But tonight, the overnight session showed liquidity below. The market is trending lower. I'm expecting the 70 to likely be tested, and I'm seeing noise above in the order flow. So that's where we stand in that respect. Again, this is ctbookmap.pro. Here's what we're looking at for today to wrap up. Qu'est-ce qui se passe? There we go. It's a little delayed. This morning, we're opening on the edge of yesterday's low. Remember, we left a gap zone down here between 75 and 78-ish. And the expectation this morning is an open that tests below, consolidates, and then responds, looking for to push into that prior all-time high in the 85 area. That's the value low. I'm looking for a consolidation. I'm expecting it to have a difficult time going through here. And then I'm looking for it to roll over and test this low to come back into balance with 33.73, which is the MC point of control, consolidate, and then tag that 70, and then buyers likely to come in into the close and bring it back into balance. This has kind of been the tradition. You can see it right here, how it moved down and then tests the extreme and pushes back up, expecting the same kind of action here. Secondary, an open that immediately responds, pushes into that value low, pulls back, consolidates, and then starts to creep up and comes back into bounce with yesterday's 33.90 key area, which is also happened to be the point of control, and consolidates for a while before it continues to squeeze into 94. And then we have 98 above us as the next key area. Before we get to the century figure is 3,400 right here. It's likely to have a harder time getting there today than it did yesterday. But that's the secondary scenario. I'll leave you with those two scenarios, and I will, excuse me, hang on. The air is very dry here in Chicago in the winter, so my throat kind of gives in on me. The key areas to pay attention to, in my opinion, is the 90 value low right here in the 85 area, which is the prior high. Pay attention to that. The next area down is this 75 area. If you recall, 75 has been in play quite a bit right here, right here, right here, um, right here. It was in play. So this is the next key area. Once it spills the beans, 73 and 70. Those are the key areas to watch. How the market gets there, what it tests first and later and whatever isn't as important, but I know that if it rolls over in value at the value low area, I know that I'm targeting that the overnight stat at 75 and a quarter. I did this survey on my Twitter feed. You can find it at twitter.com/futurestrader71. It was a tweet that asked, what is what is the thing you have difficulty with in trading? And one of the most common ones is holding on to winners, right? Really, it boils down all the problems that I saw. I thought it was a very interesting thread. I certainly invite you to check it out. But if you look through it, you'll find that pretty much everybody is complaining about the same thing, and that is lack of confidence in their plan. Really, that's the problem. The problem is there's just not a belief in the plan. Here's the link to it. I'm going to put it in YouTube in the YouTube chat. There's just a lack of belief in the plan, and having a plan like this telling me, hey, if it fails at 85 and it rolls over, then look for 75, look for 70, and that helps me hold on to those trades, because it's actually kind of counterproductive, almost silly to do anything different than hang on for key areas, statistical areas, especially like the overnight stat and so on. And so this is why I create these plans. It helps me visualize what the market might do so that when it does it, there's very little thought in the execution. All right. This is why I go through this exercise with you every day, as I've done for the last 12 to 13 years. Good luck, and I'll catch you tomorrow morning. Take care.